Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, August 2nd. I'm Philip Striebel, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe these videos. Help us grow this channel as we've just received our 2,000th follower on the channel. So it's really growing quite well. Now, if you want additional research and some of the new research we're putting out, be sure to go to our website, bluelinefutures.com, click on research, go down to a free 2-week trial, select there, put your basic contact information out there, and then select what report you have. We've got everything from grains, metals, energies, currencies, livestock. We're going to put out a little bit more actionable things on some of the base metals and the precious metals here that we might not be covering before. And then also, to give you kind of a rundown on the new report that we're going to come out with, it's this Blue Line Tactical Insights. It'll give you some more in-depth, a little bit more hands-on as far as key dates of economic data that's being released, some of the option contracts when they expire, also key rollover dates. I'm going to break down some of the charts that I'm specifically watching, some key levels, some key trend lines here, also some fundamental takeaways that I'm hearing from other traders out there, like what people are watching. I just heard one 5 minutes ago that said in retaliation to Pelosi visiting Taiwan, that there is a possibility that China could be dumping treasuries and using that money to buy gold. And ever since I saw that come out, we saw a little bit of support on the gold market. So a lot of these key insights and things like that, I'm going to start putting down in some of these research reports and let you guys know what I'm hearing. In addition, I'm going to have some actionable ideas and position management. We'll give you some buy triggers, some sell triggers here. We'll have a little bit more concrete on where stop losses should be at. They'll all be end of day data, end of settlement here, so you can use the end of the day on adjusting your positioning. We'll look at some of the key crowding analysis. A lot of people didn't know that over the past few weeks, if you look at the open interest in the managed money positioning, that it actually went negative. It was negative 10,474 contracts. People were actually net short the gold market and also the silver market with that big sell-off that we had seen. Here's your chart pattern on this. Here's where we start to build that massive short position. On this one, we did get a new trigger on the long side of silver yesterday, so we're going to monitor that. It's got a key support here and also a stop loss down 1852 on a stop close only basis. In addition, money managed, I just talked about, negative 17,000 contracts. I'm going to break down some of the key things here on copper as well as platinum. Like copper, this chart doesn't look all that great. Looks like it could be really economically sensitive. We're going into a global recession. 17 out of the last 20 G20 countries are all looking like they're facing some recessionary fears. So copper could be a good hedge or a complement against a position like a long silver contract or some other speculative metal or something that is economically sensitive. There was a point in time this year where we were long silver, short cocoa against it because of the fact cocoa is such an economically sensitive food product. If you start to see a shutdown in Europe, those prices tend to sell off. Breaking down some other things here, we're going to have the platinum involved in this as well. And then we're going to break down, a lot of you guys don't know about cycle quadrants, where we are at in the economic cycle, where we've been, where we're going, what type of environment are we economically, because positioning is often affected by it, and other different commodities tend to perform well in one, but not so much the other. Gold, take it for instance, in a reflationary environment, doesn't do well. Everyone chases junk, they chase the NASDAQ, they chase any high flyer out there, like cryptocurrencies, and they actually sell gold against it. You go to a deflationary period, gold acts very well, and also the dollar index worked very well. A lot of people don't know these things, so we want to put some of this out here. We also want to have the performance table so you know where we're at here on the month, the year, the rolling year, weekly and daily, and additionally a key correlation matrix so you can understand, how gold is doing against a product like copper. There was one period in the last couple months where I was telling people as copper was breaking down, it was taking your silver with it, and you can look at the correlation between the two. They were quite high where the gold-silver ratio were breaking apart and it was heading higher. We got into the 90s from the low 70s, high 60s in the gold-silver ratio. So you could see that, sometimes key correlations, we break down a 5, 10, a 90 and also a 30-day correlation matrix for you. So it's nice here to see where we've been at, where we're going, and what the key trend is. And then additionally, where's the volume at? Because if you look at the U.S. equities, the volume just hasn't been there. And I believe if volume comes back in, you'll start to see that sell-off. So it's one thing to know, how was this market rallying? What was the volume at that point? Now, digging into the specifics here in the trading platform, you can see what I outlined right here on the copper market. I'm very suspicious of this rally. We'd like to see a nice close over 360 if it's going to resume that higher up trend. I'm not sure if it's going to happen. We're not sure if China is going to pivot and take a more aggressive stance against Taiwan, and you start to see an economic contraction again, or what type of retaliation that they were talking about. Now, one thing we did see in the markets is we saw the NASDAQ and other stock indices, they broke back out to the upside on news that there was no real retaliation. This is when Pelosi had actually landed. It was just about right here. It was about the 10 o'clock hour Central Time. She had landed safely. She had shaken hands with several officials. And then since then, the market breathed a sigh of relief. I'm not sure how long this rally is going to go in the market. Again, if you know me, I'm quite suspicious of it, as I believe that this recession, we're only in the middle innings of it, and I think it's going to get a lot worse. Other markets that I'm keeping an eye on here, again, silver. Let me get back into a daily chart. That's the 15. We've been breaking down just a touch here. I think it was some of the safety trade had really come out. That's why gold backed off. We had gold up at 1803, starting to back off 1790. You got silver running right into this 50-day moving average. It might be following that copper market. So some of you I talked to today that are long silver, we put some short coppers on to try and hedge ourselves. The way I believe it is, if you see something geopolitical event and you see gold break loose to the upside, silver will most likely follow it, and the decline of the economy and the ramifications of it will take the copper market down. Or you get the flip side where there's no geopolitical event, the copper market starts to break down on the recession, silver goes down with it. At least we got some hedge in place. So that's kind of a couple things. Just wanted to keep this kind of a tight thing. Talk to you guys about some of that new research we're going to be putting out that's actionable in the precious metals and also the industrial metals. If you'd like to get a free 2-week trial of it, just reach out to me directly. My phone number 312-858-7303, or you can email me at phil@bluelinefutures.com. I'd love to get it out to you guys. And if you have any questions on futures option trading, give us a call, 312-858-7303. And remember, futures and option trading does involve risk of loss. May not be suitable for all investors. Good luck, good trading.